Welcome back, market hunters, to the Daily Hunt for Multibaggers. It is Friday, September 27th, 2025, and Brooke and I are here to kickstart your day with some fresh AI-generated insights from yesterday's market activity.
Great to be here, Ethan. You know, looking at the data we crawled overnight, there's certainly a lot of buzz out there. We've seen a pretty active market with stocks like TSLA, EA, and INTC generating quite a few discussions. But when we zoom in on the specific companies with detailed analysis, we're really looking at a couple of high wire acts today.
Exactly. A few exciting, potentially high-growth stories, but I'll admit they do come with a fair bit of risk. So, if you're looking for that exhilarating ride, strap in. All right, let's jump right into CoreWeave Inc., ticker symbol CRWV. Now, this company is absolutely buzzing, especially in the AI space. Our analysis shows a massively bullish sentiment, and why not? We're talking about a phenomenal revenue growth rate of over 200%. They've landed these colossal deals with OpenAI, one for $6.5 billion, expanded to an insane $22.4 billion. I mean, that's a backbone for AI cloud computing right there. The community is feeling it too, with some predicting it could hit 200 soon.
Whoa, hold on a second, Ethan. While that revenue growth of 2.067 is undeniably impressive, and yes, those OpenAI deals are huge, we absolutely cannot ignore the red flags here. Our KPIs are shouting caution. CoreWeave is currently unprofitable, with a net profit margin of negative 0.28 and an EPS of negative $2. More critically, their debt-to-equity ratio is an astronomical 381.14. That's a huge amount of debt, and some users have expressed concern about their $13 billion net debt. It's a high-growth company, sure, but it's burning cash and heavily leveraged.
But Brooke, sometimes you have to spend money to make money, especially in a capital-intensive sector like AI infrastructure. The debt is for building out those data centers, buying those GPUs to fulfill those massive contracts. The current price of $120.34 is still well below its 52-week high of $187, showing potential upside. Even Jim Cramer said, if you want CoreWeave, buy CoreWeave. That's a strong endorsement from a seasoned voice.
An endorsement is one thing, Ethan, but the fundamentals are another. The price-to-book ratio is over 22, indicating it's already trading at a very high valuation relative to its assets. And let's not forget the volatility. The stock has swung wildly. Some users in our community are warning against the hype, noting that insiders were selling when it was at $40. This isn't just a high-risk play. It's a bet on future potential over very real current financial distress. For most investors, this is definitely a stay away due to the extreme risk and lack of profitability.
All right. Point taken on the risk, Brooke. But for the adventurous, let's move on to our next one, Datavault AI Inc., or DVLT. Now, this is a small-cap player, currently priced around $1.09, pioneering in the emerging Web3 and AI blockchain space. They've had some recent positive news, like a $150 million investment, and their CEO even acquired 10 million shares, showing serious insider confidence. They're planning a supercomputer, boosting XRP adoption. Sounds like a real challenger in a high-potential sector, doesn't it?
It sounds exciting, Ethan, until you look at the numbers. While the notion of high growth is tossed around, their revenue growth is a mere 4.029%, which for a pioneer in a niche isn't explosive. And let's be blunt, DVLT is a loss-making company, confirmed by a dismal operating margin of negative 7.18%, and a net profit margin of 0%. Their debt-to-equity ratio is a staggering 52.64, indicating substantial reliance on debt. But the biggest red flag for me, truly, is the contradictory financial data. How can a loss-making company have a price-to-earnings ratio of 0.21 and an earnings per share of $5 for a $1.09 stock? That simply doesn't add up, suggesting an opaque financial picture picture or one-off gains not tied to core business. The community is skeptical too, with comments satirically dismissing the high growth claims.
Well, sometimes these early-stage tech companies have complex accounting or one-time events that skew those numbers. The focus should be on the innovation, the potential in a nascent market, and the strategic partnerships. They're making moves.
Moves that aren't translating into sustainable profitability, Ethan. Their return on equity and return on assets are both significantly negative. These are not just complex accounting issues. They are fundamental signs of a company struggling to create value from its operations and assets. Given the financial inconsistencies, high debt, and lack of core profitability, my analysis strongly suggests to stay away from DVLT. It's too high risk with too many fundamental questions.
Well, that was a spirited discussion. As always, for today's deeper dive, we don't have any stocks that meet our investigate as buy or investigate as cautious buy criteria from our detailed analysis due to the significant risks we've uncovered. However, for those of you who thrive on high-stakes, high-reward opportunities, we do have a speculative gamble candidate where the community's optimism is palpable despite the inherent risks. Investigate as buy. Investigate as cautious buy, investigate as speculative gamble, CoreWeave Inc.
And that wraps up another episode of the Daily Hunt for Multibaggers. Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence, summarizing publicly available market commentary and KPIs to save you time and help focus your own research.
That's right. This is not financial advice, and the data could be outdated. So always conduct your own research, and if in doubt, consult a licensed financial advisor before making any decisions. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for tuning in, and we'll catch you next time on The Daily Hunt.
Happy hunting, everyone!